Hello, hello, everybody. What's up? Sean Zalmanoff here with your mortgage rate update. So this arrow, it's important. We'll get to that in a minute. But I wanted to share an incredible chart with you that I pulled from our friends in the Commonwealth of Pennsylvania. Well, actually, let's talk about this arrow first. We're going to lead into that. So last week, I was telling you that there was 906,000 jobs that the Bureau of Labor Statistics thought was going to be created. And actually, they revised that number up by the end of the week to 978,000. But in actuality, only 266,000 jobs were created. It was also expected that the unemployment rate was going to go down from 6% to 5.8%, but instead it went up to 6.1%. A lot of interesting things in the numbers. So this all came out last Friday, and the stock market rallied on this news. And it's interesting to see how things move, because the stock market on bad news rallied for the economy. And it's very interesting today because the Dow was up huge earlier today. It's closing the day pretty flat, whereas the NASDAQ and S&P also had big sell-offs. So as we dive into these numbers, again, I mentioned this chart from the Bureau of Labor Statistics from our friends actually in the Commonwealth of Pennsylvania. So let me show you this chart and why people think what's happening, how it's happening. So if you look at the minimum wage, and this is the minimum wage of Pennsylvania of $7.25, somebody on unemployment right now is actually making $11.23. You can see a dishwasher, hotel clerk, a preschool teacher are all making more money on unemployment right now than they are in working. A truck driver, a dental assistants make a little bit more, and then the median wage is again a little bit higher than what the actual numbers say. So it's interesting because people are making more money sitting at home than they are getting a job, not thinking about that in September all of this runs out, and when it runs out, then people will be back to needing to get a job again. So those people who have been employed, those people who are looking for jobs now, are obviously going to have preferential treatment with with their employers, and it'll be interesting to see how these play out. The other big thing that we have this week, on Wednesday, the Consumer Price Index comes out. So that is what we as customers pay for goods. The following week, we'll get the Producer Price Index. This number is going to be hot. It's going to be incredibly hot. So again, that the Fed tries to peg inflation somewhere around 2%. They're letting it run hot to 2.5%, which we may hit year over year this month. And remember, these numbers are going to run really hot for the next few months, because as you remember, a year ago, April, May, June, prices were decreasing because of the pandemic that was sweeping across the world and still is in some instances right now. And that caused prices to drop. So when you take the year over year numbers, we're going to have some big increases. The number one thing that matters is what happens actually in the future. And we don't know yet is if they continue to run hot or if it's a temporary thing. And that is, at this point, about the $20 trillion question that we are asking. So, folks, we are always here for you. If you need any real estate advice, mortgage advice, you're looking to buy, refinance, sell your house, hey, you just need some good advice on a repairman to fix something in your house, please give us a call. We are here to help you. I'm Sean Zalmanoff, and hope you have an amazing and awesome week. Peace, y'all.